With Mayuresh Joshi as well, who joins in. Mayuresh, the stock is off nearly 5% from the low point of the trading day after the management said that they're not privy to any information regarding that whistleblower complaint. But do you think this is convincing enough for the street, which has punished the stock quite severely?
Afternoon, Aman. I think all the news items surrounding the stock at this point of time, I think let it settle down, because really at this point of time reacting to some element of news piece which is not authenticated at this point of time does lead to further speculation. So I think restrain from commenting any further on this. I think let it settle down first. Let there be further clarity in terms of what is actually transpiring, and then we'll probably take a call on the stock.
Right. When you talk about the pharma pack, Mayuresh, probably one would say that this would be a year of pharma and IT when they started the year. What is your call now on the pharma when Sun Pharma is declining this way? Of course, this is not for US FDA reasons. This is not for reasons of pricing pressure. But other large cap pharma companies can be looked.
Afternoon, Pankaj. Again, I think the landscape for the sector as a whole has definitely improved over the past few quarters. The pain and hit that the sector took over the last couple of years was very, very evident, both in terms of FDA complaints, which were thick and fast, both in terms of import bans, import alerts, and that had a double whammy because I think the approvals were probably not coming through for the affected plants, and the compliance and regulatory costs in getting these plants cleared had a huge say in terms of P&L. The other element, as you rightfully pointed out, was also the pricing pressure that these companies faced, and these pricing pressures actually pulled down earnings estimates for a whole host of pharma companies, barring a few which had a few niche products that still had the pricing element in their stride. The third element obviously was, as these concerns started abating over the last 2 to 3 quarters with FDA issues getting resolved, you probably had a far more consistent specialty pipeline getting built by these pharma companies because of the elevated R&D expenditure that they had done over the last 2 to 3 years. And these drugs probably have the exclusivity and the pricing in their stride, which probably gives them the support from a margin perspective as well. So as these approvals will start coming through, I think the margin improvement and the margin profile for a whole host of companies should probably improve, because a whole host of tier 1, tier 2 companies have niche ANDAs which are lined up for approvals. The third stack obviously is the valuation, and a few companies obviously are valued on a richer scale when you're probably talking about FY20 estimates. But as you start rolling over to FY21 and the assumptions of few more drugs coming into the pipeline, I think the earnings look far more sanguine at that point of time. Yes, so it does make sense for some qualitative stocks within the top tier and the mid-tier universe to be held on in the pharma space.
Okay, just want to revisit some of the other names, and I want to see what Wipro is up to ahead of its numbers. About a 2.5% uptick there. There's also Mindtree, while the numbers were at best in line, but the stock has been holding up today. And then Federal Bank. This is very interesting, considering yesterday when the earnings came out, Federal Bank did not really have such a pleasant reaction. That stock was down 3%, but today you're seeing that move about 1.5% higher. The management in their interaction with us also clarified that the NPA cycle would come to an end soon, and thereby that case of high provisioning. Mayuresh, what is it that you're firstly making a trend of IT? Inline numbers coming in from TCS, inline from Infosys, Wipro, while it's expected to be, yet again a muted quarter, but I guess all the excitement around large cap and small cap IT continues to be with the buybacks, with the bonus issues, which I guess is the buzz for Wipro as well, which is why we're seeing this heightened move in the stock.
And that would be the case, Aisha, and a large element, if you probably speak in terms of how the currency has moved, I think that clearly has created pain points for the sector in terms of reported EBIT margins. To top that up again, I think they're traditionally weak quarters, so Q3 because of furloughs, Christmas holidays, Q4 in terms of how the discretionary spending patterns will pan out for the US markets, for the European markets, are going to be critical in terms of how the entire landscape will pan out. Now, when you're talking about a scenario on one hand where digital revenues are increasing every quarter around 30-35% for the top names, even for a few of the mid-cap players, 30-35%, 50% in certain cases, I think that is an encouraging sign, because their better margin profile segmental contributors from a digital perspective. Having said that, again, I think if there is an inherent and a perceived slowdown which is expected to take place over the next few quarters, what kind of an impact does it probably have in terms of their order books? The order books are pretty stacked up at this point of time. The TCV deals for top tier names, including Infosys, TCS, when you're probably talking about companies which reported numbers right now, NIT Technologies, Mindtree, I think there is reasonable amount of order intake that has happened, and they are sitting on reasonable order books, which means execution will happen over the next few quarters, and the margins should also hold up. Now, in such a scenario, when you're expecting a reasonable earnings growth taking place, are you probably valuing companies on a richer scale in terms of their price earnings multiples going forward? So I think the richly valued companies will probably stay stuck in a range. I think companies which are able to outperform in these markets in terms of delivery, in my opinion, and where the valuation is probably a little bit on the lower side, can probably outperform. So I think you need to take a stock-specific approach within these markets, but I think specific names within the mid-cap players and the large-cap players should do well. So I think we continue holding on to stocks like a Nucleus Software in the mid-cap universe, stocks like an Infosys within the large-cap space.
Okay, let's get right back to our discussion with Mayuresh. And Mayuresh, there's a whole host of important numbers due next week. I'm handpicking one, that's Maruti. By and large, we're expecting that the tepid volumes could translate into a flattish top-line growth as well, and there will be commodity cost pressures being felt. The management is looking at, new launches in order to try and rev things up. But going by the kind of December auto sales numbers, what are you penciling in for Maruti?
No, one again, I think going purely by numbers that have got reported over the past couple of months, I think the softness for the auto industry should continue. Again, I think Maruti, the reported numbers thereof, the softness that we've probably seen in volumes are going to have an impact in terms of the overall top line growth. So the December quarter is expected to be muted. To top that up, what you've probably seen in terms of input prices, the input prices have moved higher. They have taken selective price hikes, but what probably happens even in the December quarter is the liquidation in terms of the inventory for 2018. So again, the discounting factor remains extremely high in the month gone by. So yes, I think the margins on the EBITDA front should also be under some amount of pressure and softness. But I think it's the longer term outlook that one really needs to look at. The kind of launches, as you rightfully put through, I think is something that the street is keenly awaiting for. The response that it probably gets and the kind of market share that it probably has across its variants, I think does hold Maruti in a very commendable position at this point of time. The price hikes that they've probably taken, what kind of an impact does that have on volumes? And the management was very, very categorical that the volumes should probably normalize over the next few months. And as margins normalize as well, I think the leverage should get played out on the balance sheet. Coupling that up with the kind of utilization one sees as his Gujarat plants and better fixed cost absorption on that front. So yes, I think there is obviously value over a longer period of time. From a short-term perspective, there might be pain, but again, I think that pain has got played out on the stock price in general in my opinion.
Right. Mayuresh, which way is Reliance headed? And, while there's no denying that the numbers were great, and we chatted as well after the earnings yesterday, but would you say that there is significant upside still left in the stock after what a great last year and start of the year to now has been?
So obviously it's been one of the best performing stocks, Ayesha, over the last year. But again, as I mentioned yesterday as well, I think the landscape has to be pulled over the next 4 to 5 years for Reliance at this point of time. I think when you're probably talking about their two core businesses, refining and petchem at this point of time, there is obviously some amount of concerns relating to the terminal valuations for both these business segments. And I think the management is very, very clear in driving retail and digital services, which are going to be great value drivers. Now, even in yesterday's numbers, the contribution is increasing at this point of time. The EBIT margin contribution, both from retail and digital services, is increasing as well. And with the increase that you're probably seeing, both in terms of volumes and the expected numbers, both on the top line and the EBIT front, I think that should play out very, very meaningfully. At the same time, I think their core capex in their core businesses of refining or petchem are behind them. There is stabilization that is expected. The IMO regulations that will come through are definitely going to abet the refining part of their business. Petchem obviously is a lot more dependent in terms of crude pricing and what probably happens in terms of downstream pricing as well. And there is a very whole host of complex products there. You've got paraxylene, you've got the PX products, the PTA products. So I think there might be some lumpiness in a quarter or two, considering each of these individual business lines within the petchem part. But the overall number should hold up for Reliance. So yes, I think it's a larger canvas that I'm putting through over the next 2 to 3 years. I still remain very, very constructive, which means very, very positive on the stock. And a clear disclaimer, I own this stock in my funds.
What's the take, Mayuresh, when it comes to L&T, or slated to deliver its numbers next week? Do you think that we could see strong growth within the infrastructure segment? You know, we have seen large orders as well coming in. Would that help the overall order inflow?
So again, I think the kind of reported orders that L&T has put forth in the quarter gone by, and the expectations of front-loading of orders expected to continue in this quarter as well, for obvious reasons, because of general elections happening over the next few months, and the expectations of muted orders in the quarter to come. I think a large element in terms of the orders that they've probably received over the past few quarters, specifically on the infrastructure side, and the kind of execution that this company is probably doing. I think that is a direction that the company is ideally slated, and that they're probably poised to go after. So again, I think in terms of their overall targets over the next 3 to 4 years of doubling of revenues, of taking EBITDA margins closer to 12 to 15%, the kind of revenue growth that one expects to get delivered on similar accounts, the expectations of working capital requirements coming to that 18-19% mark, and ROE expansion happening to 18% as well. So I think even if they're able to achieve a gradual improvement over the next year and a half, and the general macro situation in the country as we've seen it, specifically from utilization levels and the execution for the company in general on the domestic front and even on the overseas operations, the fall in crude prices is something that one really needs to watch out for, specifically in terms of overseas execution and the receivables position thereof. I think the overall consolidated book, when it comes to E&P, when it comes to infrastructure, hydrocarbons, I think it should hold up pretty well. So yes, I think it's a barometer to the Indian economy, and simply put, I think anybody who's holding on to the stock should continue to hold.
Okay, continue to remain invested in L&T. Mayuresh, we'll let you go. Thanks much for joining in, and have a good weekend. But let's get in some